Hi, I'm Nirmal and today we discuss about cost reduction, the meaning of cost reductions and the techniques of cost reductions in operation management. So, first of all, we discuss about cost reductions, the meaning of cost reductions. So, the cost reductions program is a type of method which is to improve profitability of the organizations or by expected to get a good result that flow to the bottom line of the financial statements and exempted from any serious damage to the organizations itself, as this program is much more about reducing cost or reducing expenses of the organizations. So, a good cost reduction program is all about how to control the damage of an organization. Furthermore, a cost reductions program is said to be improve the profitability of an organization because by reducing expenses, profits are increased without making others changes. On the other hand, if the cost reduction program can matched with a sale improvement program, and perhaps finally it will get the double profit. So, a cost reduction program must be a complete plan that is result oriented. A structured cost reductions program will put the company on track to achieve maximum profitability and achieve the highest performance of an organization. So, moreover, this program also implies a series of programs that retain all of the essential characteristics and quality of the products, and thus it must be confined to permanent and genuine savings in the cost of manufacture, administrations, distribution, and selling brought about by eliminating of wasteful and inessential elements from design of the products and from the techniques and practices carried out in connection therewith. So, what is the difference between cost control and cost reduction? The difference between both of it can be summarized as cost control, ensuring the cost is in accordance with established standards, whereas cost reduction is concerned with try to improve the cost by continuous and without accordance with any of the standards. So, the main benefits of cost reductions program are it can enhance profitability and enhance cash flow of the organizations. So, it presents the key elements and factors to consider in program design and implementations. So, cost reductions program is also can ensure the results will match with the goals or objectives and values of the organizations, and it is a widely acknowledged fact that cost reductions program is one of the most challenging responsibilities or tasks that is a company needed to undertake, especially when there are so many ways open to cost conscious managers. Finally, an interested tax reductions program can reduce the onerous financial burdens that can stable a company development and can free up precious capital that can be result to the firm's long-term benefits. So, cost reduction techniques. There are five main cost reduction methods are employed by businesses. The methods including target costing, that is TC, activity based costing ABC, just in time GIT, enterprises reducing planning ERP, and value engineering VE. So first of all we discuss about target costing. The target costing, also called product costing method, in which an attempt at the planning and development phase of a product life cycle to attain a specified cost that is decided by management. This approach is to seek the lower cost by designing a quality product that reduces cost in the production phases. It can be described as a systematic process of cost management and profit planning. Now we discuss about case study. In 1993, Toyota uses target costing approach to generally reduce cost at design stage. By using this approach, Toyota sets goals for cost reductions and then tries to achieve these new targets through design changes that will accomplish the cost reduction goals. Toyota was comparing the cost of the new design with the old design in order to guarantee a cost reductions after implementations of the new techniques. So this is the main idea that Toyota uses to achieve their company's wide goals. There are several steps in the sequence of prices, production and cost designs and decisions. So first Toyota decides what the new retail price of the automobiles by taking the old prices and adding the value of any new functions. These sales divisions comes up with a suggestions for production volumes by taking past numbers and indexing them to market trends and the state of competitors. Secondly, Toyota is focused on cost planning. This cost planning is based on the product plan and target for retail price and also production volume. This purpose is using cost planning by Toyota is for determine the amount by which cost can be reduced through better design of new models. So Toyota establishes a profit targets that is subtracted to determine their target cost. These cost planning decisions are made for this year before they release the model. So Toyota eliminates the approximate cost of a new models by sum of the cost variations, the new model and the old models. The technique is very beneficial to Toyota because it tends to be less work and provides more accurate results. In addition, it also helps the specific divisions understand the cost fluctuations besides that. So Toyota removes variable cost. Both models incur such as wages and indirect cost by using this approach. Meanwhile, they use their decisions on cost that change between the two models in design and production volumes. The main point is in the case study is to show how cost planning at Toyota is focused on the design phase. So Toyota does this by setting goals for cost reduction through design changes. Toyota takes goals and then assesses them to different divisions to make the necessary changes. So Toyota believes that they changing product design to produce lower price to achieve a higher level of profitability. So now we discuss about activity based costing. Activity based costing is a costing model that identifies the cost pools or activity centers in an organization and assigns cost to products and services, that is cost drivers based on the number of events or transactions involved in the process of producing a product or services. The concept of activity based costing has been considered a sophisticated method of cost calculations since the early 1980s. So in addition, activity based costing ABC assigns manufacturing overhead cost to productions in a more logical manner than the traditional approach by simply allocating cost on the basis of machine hours. So activity based costing first assign cost to the activities that are the real cause of the overhead. It then assigns the cost of those activities only to the products that are actually demanding the activities. So now we discuss about the case study of the materials. So the Boeing Commercial Airplanes Group, that is BCAG, is the world's largest manufacturers of the commercial airplanes. It compromises approximately 60% of Boeing total revenues and a cost-centered manufacturing plant producing fuel cells, noise, trucks, nacelles, etc. So, the cost management strategy supports initiative designed to link the manufacturing process and support activities so as to simplify the whole production process while maximizing benefits from the use of lean business practices. Cost management strategy initiatives include simplifying production, shorten flow and cycle times. As I earlier said, that increasingly qualify quality and inventory turnover, identifying core products and processes in an organizations, and linking the design and manufacturing processes to decrease production time to market. So actively base costing links and supports the manufacturing processes. It provides informations to tailor business teams and materials management. So cost of activity and processes volume added versus non-value added analysis and profitability analysis used to improve to mix versus buy decision making process. So ABC also provides analysis of setup and turn run costs, cost of scheduled and unscheduled maintenance, cost of assist failure, and cost of manufacturing capacity, thereby allowing manufacturing managers to manage the assets under their control more effectively. Finally, ABC provides analysis on the cost of design changes in configurations as impact on the manufacturing floors, cost of incorporation complexity into a configuration design, and cost of quality. The highest hurdle to achieving this type of cost management architecture lies in moving the corporate financial department from its classic accounting role as scorekeepers or policemen to the role of business partners. In a business partner role, the corporate financial department can support strategic decisions relevant to the company's continued competitive advantages by providing financial data that highlights the impact of these decisions. So BCAG views a successful implementation of ABC as one of the fulfills three major roles. That is, first of all, addresses the size, complexity, and diversity of the manufacturing process, facilitate the integrations of financial decisions makers into a more supportive business partnership role, and implements effective cost management strategy initiatives. Now we discuss about just in time. Just in time JIT production, also known as lean production. It is a pull system of production, means the actual orders provide a single for a when a product should be manufactured. So when there is a demand pull, it enables a company to produce only what is required with the correct quality and quantity at correct time. These features of just-in-time production systems accomplished close organizations among work situations. Therefore, its objective can be defined as producing the right part in the right place at the right time. In other words, just in time. So now we discuss about case study. In July 1990, managers of Daioku has begun completing the Kanban production system, moving from the traditional push type production management to pull type production management. This type of system produces only quantities necessary to fulfill the demands of the next operations. The quality is pulled when it is needed, where it is needed, and is the exact quantity which is needed. So for instead, since beginning the implementation of the just-in-time, many difficulties have occurred. The difficulties includes number one, combining the data and materials flow instead of classifying them. Number two, post of the production is store and manufacturing processes instead of a flow without any cost. Number three, changing form L-shape assemble lines into V-shape assemble lines. This requires a set of new equipments and techniques. So problems exist between Daiko suppliers And for instance, traditional ways of shipping material based on the predetermined plan is now being eliminated, and every supplier is now required to collect the Kanban bag from the other post and ship their material based on the information in Kanban. So everyone in the firm requires to participate in just in time. They need to determine how to make shop floor operations become easier and efficient. So Diaco carried out the discussions and meetings to find solutions to the problems in the year of 1992. Therefore, Diaco sent their experts to help suppliers to solve their problems. Gradually in Dayoku, the inventory part was reduces the dramatically in this year by using just-in-time method to stock levels of raw materials work in progress. Components and finished goods can keep in a minimum. However, this requires a careful plan, scheduling, and flow of sources or resources through the production processes. Just-in-time methods promotes continuous enhances on the productions. At the same time, the method can eliminate waste. So waste results from any activities that added cost without adding value. For examples, the unnecessary moving of materials, the accumulations of excess inventory, or the use of the faculty productions methods that create productions required subsequent rework. Just in time should enhance the profits and return on investment by reducing inventory levels. So, rising the inventory turnover rates, reducing variability, improving production quality, reducing production and delivery leads time, and reducing other costs like those associated with machine setup and equipment breakdown. In conclusion, just in time production systems aims number one, meet customer demands in the timely manner, number two, at the lowest possible total cost, and number three, the highest quality products. So enterprise resource planning, now we discuss about this. What is enterprise resource planning? So enterprise resource planning, ERP, is a computerized inventory control and production system that was born from materials requirement planning systems, that is MRP. It is system that organize functions of an institutions. It assists in account finance, human resources, and e-commerce applications through creations of databases and graphical users interfaces. It unifies the tasks of institutions like corporations, government agencies, non-profit organizations, powerful institutions, and industries and businesses establishments. So there are some business start to compete on a global scale. It is critical to streamline operations and processing business to reach a higher levels of productivity and efficiency in information exchange and supports e-commerce applications. For example, supply chain management, that is SCM, and customer relationship management, that is CRM. On the other hand, software that comes up with functionally to various systems that will coincide with some another as a whole is required to combine all of the informations or operations of a company so into a single unit. Central database is one of the most outstanding parts of the ERP systems. So now we discuss about case study. So firstly, in order to implement the technique side a common structure across the company, the vanilla would be code 1 2 3 4 in every divisions. The SAP system customized around the uniform affairs procedure. The group decided and that are not the use of SAP in supply chain because the ERP supply chain module adopted was brand new, and therefore Rixi furthermore Magugist supply chain models followed all SAP standards that could easily be integrated. So Nestle implements 5 SAP modules which are purchasing, financial, sales and distributions, accounts payable and accounts receivable, and the supply chain module which deployed across every Nestle divisions by March 1998. Besides that, the purchasing company for confections pursues the identical best practices and information as the purchasing company for beverage. So the value engineering. Now we discuss about this. Value engineering is a systematic method to improve the value of goods or productions and services by using an examination of functions. Value as defined as the ratio of the production to cost. Value can be therefore be increased by either improving the functions or reducing the cost. So it is primarily tenet of value engineering and basic functions be preserved and not be reduced as a consequence of pursuing value improvement. Value engineering is sometimes taught between the project management or industrial engineering body of knowledge as a technique in which the value of systems outputs is optimized by crafting a mix of performance functions and cost. In most cases, this practice identifies and removes unnecessary expenditure, thereby increasing the value for the manufacturing and other customers. So, thanks a lot for watching.